What's going on, everybody? Hope everybody's doing very well on this Thursday morning. This is Travis Witherspoon from Carter Cow Trading. I hope everybody's doing very well. Trade with Travis on YouTube. As I go ahead and get everything situated, making sure that everybody can be able to get onto the live stream. I hope everybody's doing very well on this Thursday morning. Sorry for the overall difficulties of what ended up happening on Wednesday. My computer literally turned off after getting everything fixed. So it was one of those things to where it wasn't necessarily the greatest time to be able to work, but something came well out of it. I ended up getting some of my new products for my new build that I'm going to end up having for my new computer and everything else like that for my company. So with that being said, let's go ahead and get started with the overall disclaimer, and then after that we'll go ahead and move forward. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, I'm going to get ready to show myself onto the screen. How's everybody doing? Good morning. Once again, it's been a crazy few days trying to make sure that everything. Okay, sorry about that. Been a crazy few days trying to get everything kind of situated and running. I've been working with Restream, and I actually ended up going with the paid version of it now. So that means that literally now I have three different I have three different ways of being able to be seen. Obviously, Trade with Travis on YouTube and going to my Facebook page and on my business page at this particular point. So there's plenty of ways of being able to see us and see what we're doing for the overall trading. It's just that we've been kind of slow in the way that we've been kind of developing it or trying to putting everything together, which is something that I've been kind of frustrated with, and that's something that I have to do better on my end. So once again, please apologies when it ends up coming down to that. But with that being said, let's go ahead and get started. Remember, this is a 30-minute live session. What we end up doing is taking a look at overall Forex trading. We look at Forex, U.S.-based Forex, U.S.-based pairs when it comes down to Forex trading. Take a look at a little bit of metals and everything else like that. That's for our masterclass students and everything else. And also have a chance to be able to take a look at crypto and a few other things. If you have any questions, obviously I'll take a look at the charts that you would like to be able to look at. I think that will end up helping out everyone else for us being able to understand about what we have going on. And like always, if you're interested in being able to learn how to be able to Forex trade, but you have not gotten to a point to where you know exactly what to be able to do, what I'm getting ready to show you is what we end up doing to be able to help compensate when it comes down to that. That is our Forex 5-day Forex bootcamp, our 5-day take action course. We're going to end up having that January 25th, January 29th. If you're interested in being able to learn a little bit more about that, please make sure that you end up going to this link. It's Facebook events, and I'm going to end up clicking that on and making sure that I end up placing that inside of the comment section. So if you're interested in being able to learn a little bit more about that, typically what we end up doing from there is our 5-day session. Where you learn everything from the ground floor for what is Forex, how you can be able to make money off of it, trade in terms of terminology. We help you end up getting set up with an overall trading account, help you end up getting started with a simple and quick and easy thing that you can be able to do on your phone each and every day when it comes down to trading, and be able to go from there. Now, also, we haven't necessarily been on Instagram all that much, and we'll get back onto that, but want to make sure that we can be able to go from there. As my son walks in the background. Good morning, big dog. He just woke up. So with that being said, let's go ahead and get started. No wasting time. So what ended up happening yesterday? Obviously, there was a lot of things that ended up happening yesterday.
Daddy,
what's up?
Gingerbread?
Huh? Good morning. Let's see. Let me get him to wait.
No, I do.
Say hey, everyone. Say hey, everybody.
Yes, I do.
No, say hey, everybody.
Yes, I.
Okay. Huh. Going around. Give me 1 second. Good. Okay. So obviously, runoff and votes and everything else ended up getting talked about yesterday. There was a lot of stuff that ended up happening with that, and from that overall information, then we end up having a storm of people go to the Capitol building, go inside, and everything else like that. Now, obviously, you got to think that that has to have some type of negative view when it comes down to the dollar and seeing things fall. Well, it was the complete opposite. We actually end up seeing things like the U.S. 30 and everything else like that end up soaring. Now, they soared because of technical news, because of technical stuff, not because of what happened with the overall news and flash and pan, how that end up happening. All right, so got to keep that in mind when it comes down to this. Sometimes that news will end up pushing the market down. Sometimes it ends up keeping it, and it's like business as usual. And I don't understand why it was business as usual, but it just happened. So, with that being said, earlier today, what we end up seeing consumer confidence and retail sales, all of that stuff was negative from the eurozone. A little bit later on today, we're going to end up seeing ISM PMIs. So today is pretty much still more of a trading day. The start of the week is actually being start of the trading week is being kind of bland, and it's been pretty much the same when it comes down to that overall movement. Taking a look at what's happening with the big three, we're going to go through this very quickly. We talked about the U.S. dollar index first, like always. The reason why we take a look at the U.S. dollar index is because we want to take to see what's happening with the other pairs. From a daily perspective, what ended up happening was that the market has hit a daily D extension, and since then the market has started to recover a little bit. We're starting to see a little bit more of a morning star. Now, I don't understand. Me personally, I know that we end up hitting a daily D extension. That is something that we have to understand. But when we're looking at this overall movement at the beginning of the day, I think this is more of weakness when it comes down to every other pair and not strength when it comes down to the United States dollar. That's just my personal opinion. But in looking at this, if the market remains to be the same when it comes down to this movement, we have a morning star. We're basically in a buy zone. That means that more people are going to look at being able to buy on the overall dollar going and move forward. You haven't had the full trading day because obviously 8 o'clock, 8:30, all the way to about 11-ish. It's going to end up being most of the movement, and we have to see how the market kind of reacts to that. But at the beginning of the day, the market is actually bullish. Now, I'm kind of staying away from the market because the market, to me, I believe it's overall bearish, and I'm looking at selling opportunities. So, me personally, I'm looking for high prices to be able to sell down to the weekly D extension, and at this particular point, it's looking more like we're going to end up seeing more of a retracement than what we've been paying attention to. So U.S. dollar pairs kind of going to end up staying out of when it comes down to that. Take a look at oil. When we're looking at oil overall, what we end up talking about, we said that this market was going to end up hitting $50.61, and just like what we end up talking about, bam, there it is. The market has just hit 50.31. If you end up getting into that trade, congratulations. You end up making a little bit of money when it came down to that. We talked about there were two things that can end up happening. One, we were looking at a crossover to be able to see you can be able to get in on that overall pair, and we we're waiting for the crossover bullets to be able to manage and get everything that you could off of that. Now, the daily D extension has hit. The weekly D extension has not hit, and that's up to 67.42. So what are we waiting for at this particular point now because oil has hit? We're waiting for a little bit of a retracement. If we can get that retracement, we can end up creating another Fibonacci, and then after that, starting to push back up towards the extensions. Again, we end up hitting on one U.S. oil end up hitting. So congratulations to the people that end up trading with us when it came down to that. Let's take a look at gold. Gold, we end up talking about how this market was going to end up pushing up, and then after that, retracing and retesting. And just like what we end up saying, the market ended up hitting this overall low at 1768, which was the start of which was the start of December. Ended up having a strong rally up. We're still going through this. We end up breaking out of this downside channel. We end up seeing this market actually go to the downside and is in the sell zone. What are we waiting for? We need to see a retest of this overall zone of this 1870 to 1850 area. Question is, will we get that because of what ended up happening yesterday? That's something to be able to pay attention to. We see that the U.S. dollar is starting to get a little bit stronger. If we're going to have a stronger push to the downside, and with this being more of a Pearson line when it comes down to this overall candlestick yesterday, we should see a little bit more movement to the downside. Maybe 7 to 11 business days of overall movement. It may end up being a little bit less than that, and then after that, we end up going from there to the overall downside. But I do expect for the market to be able to go to 1870 or somewhere around that area, and once it does, then I'm looking at being able to buy long term up to the 2000 area. But that's something that was predictable. It's something that we end up talking about. We have a breakout. Now we're looking for a retest, which brings me to silver real quick, because we end up talking about how I ended up getting into silver a little bit earlier, and the $27 mark was something that was very important to pay attention to, but we was at the top of this upward channel. So what did I expect? I expected that the market was going to end up falling. This has not failed at the overall rate that gold has. Give me one quick second. I'm going to put y'all on mute. Testing, and we're back. Okay, so what I ended up saying was this market ended up hitting the top of the overall channel right here at the top. We expected for that to be able to happen. We expected for it to be able to test, but we didn't know if it was going to end up breaking out. Remember, silver's been kind of more of the indicator on what's going to end up happening when it comes down to gold at this particular point. If silver breaks out early, then that means that you'll see an overall movement, retracement, and go. Well, that's what we've seen from this downward channel that ended up happening. It pushed up, kicked back, retested right here, this overall spot right here, and then started to push back up. Currently, right now, we see that we have another channel that's starting to form. So what is the expectation? Expectation is I think that the market is going to end up falling down a little bit and getting back down to those $26, maybe $25.50. If we can be able to get it at that low, then I'm very much interested in being able to buy long term to be able to take it up to $30. Now, the question is, are we going to end up having that strong U.S. push? If we're going to get that strong U.S. push, then that'll be something that is going to end up being very welcome when it comes down to some traders, because we want to be able to see that this market is going to end up giving us a slight retracement. If it gives us a slight retracement, then that means that we have a chance of being able to get in and be able to make a pretty good penny while this market is trying to go up to 32 overall. And that's my overall expectation. That's what I'm personally looking for. I want the market to be able to fall a little bit more, give us a chance to be able to get in and then be able to go from there. All right, so that's where we're at when I down to that. Last one we talked about gold, we talked about silver, we talked about the US dollar index. Okay, so we're good with that. Let's go ahead and take a look at the US based pairs and kind of see what's actually happening. Now, first off, I want to take a look at the currency strength meter and see which currency has been doing very well overall. Currently, right now, we can see that the US dollar has been moving strong. We see that the pound has been moving very strong, at least at the beginning of the morning, then fell down. We see that the Australian dollar and New Zealand dollar has been falling. Now, the reason why the Australian dollar and New Zealand dollar has been falling is because they actually end up hitting the extensions towards overall movement. Typically, remember, we look at their movements that happen right around 5 to 9 o'clock. And then after that, then you have a slight little movement when it comes down to what happens during the U.S. session. So overall, that's the overall expectation. So if we see that the Australian dollar and New Zealand dollar are getting very weak, the question is, can we find opportunities being able to trade these? And should we be looking at U.S. dollar strength when it comes down to trading these pairs? Well, going back to the U.S. dollar index, said no. Should not be looking at these overall pairs when it comes down to that, because the U.S. dollar index has not truly turned itself into being fully bullish. All right, so with that being said, just need to pay attention. But basically what's happening is that the market is basically retracing again. So we can see that we're in the sell zone. We talked about being able to get into this pair and hit up at 7,300. We talked about yesterday, if you end up closing out on that overall position at 7,300, in which we thought that'll end up happening, congratulations. We end up making money on that pair as well. We're 2 for 2 when it comes down to what we talked about with the overall US based movements and everything else like that. Now, what is the overall expectation? Where is this market going to end up falling down to? Well, it's kind of hard to believe that this market is going to fall down to 68.50. So typically what you can be able to do is you can go back and take a look at what happened in previous history, get an idea about what's going on for that overall movement, see that around here, where the market is probably going to we noticed that the market is going to fall down to somewhere around this overall area. Be prepared that if the market does fall back in this overall area, be able to take advantage of that trading if it does fall. Now, it has already tested that area one time before starting to push up, and that ended up happening during the overall winter break, or at least when we wasn't trading in general. The one thing that I do know is this: I don't think that we're going to fall down this low. It's kind of hard to believe that the market will end up falling down 20 pips when typically the overall trading day it only moves right around 50 to 70 pips a day. That just means that this screams out U.S. dominance all the way over, and there's no reason why we should be looking at U.S. dominance down to the pairs. So I do expect that we're going to see a slight retracement. Maybe have a couple days where this market will hover around this overall area, and then after that, we end up having a breakout and a retest towards the area. I'm looking at the market. I'm trying to get in when the market gets down at this point down here, and when we end up seeing something to the equation of being able to have either a counter trend line break or a move like that towards the downside, so we can be able to catch it when it breaks, retests and trades again. We have two trades that we can be able to look for. First trade will end up being when the market ends up retracing. Second trade will end up being when the market ends up retesting and breaking out. So that's the two positions that I'm personally looking at when it comes down to being able to trade this here and being able to get in. If you're interested in being able to know what we end up doing when it. All right, so that's the New Zealand dollar, United States dollar. Let's go ahead and take a look at the Euro, United States dollar. Euro, United States dollar. We said it will going to 123, and the push is expected to go to 120.80. Currently, right now, we can see that this market is going inside this upward channel. They end up pushing up yesterday from that slight movement. And then after that, we had a strong push to the downside. Now, what's the reason why we had strong pushes to the downside? Well, coronavirus cases and what ended up happening with the Eurozone for retail sales. So look at that. We can see that we end up falling below this overall channel once again. Now, the question is this another buying opportunity? We bought when the market went up the first time, was able to make a little bit of money off of that overall movement. Currently, is this another opportunity of being able to get in at this particular point? But I would look for, if you have not got in, I would look for a low price on the 2-hour position and try to see if you're able to buy right here at this particular point. Be able to get that, then congratulations. Then we have another position to be able to go from there. I'll be a little bit more cautious on how this is being traded because of that that kind of minor U.S. strength that ended up happening a little earlier. But look at what ended up happening a little bit earlier yesterday. Something tells me that we're probably going to end up seeing more of a upside push, downside. Probably end up seeing a little bit of a retracement going into the U.S. session with a United States, with a euro dollar stronger than United States dollar overall. I just can't see that if we're in a push zone that this market is just going to fall off over to the downside. It just doesn't make it. Pound United States dollar. Let's take a look at that real quick. Pound United States dollar has been on a downside push ever since hitting 136.50. The market is expected to go up to 138. Currently, right now, we can see that we're in no man's land. Comes down to stochastic. We're able to get the market to be able to follow a little bit more. We may have an opportunity to be able to trade it. Until then, not necessarily going to end up paying attention to that. U.S. Swiss franc. Let's see what's happening with the Swiss franc. U.S. Swiss franc has been steadily moving toward the downside. Look at this overall market and where it's expected to fall. Look at the market, what it's expected to fall is kind of in line with what's happening with the US dollar index. Market is expected to fall to 86.60. Currently the market is at 88.80. Once again, I expect for the market to be able to fall all the way down to 86.60. For us being able to do that, once that happens, after that I'll be interested in being able to possibly buy. For us being able to go from there. Until then, I'm kind of out of this pair. This market moves so slow. It's almost worth to be able to get into the best position and kind of see if you can kind of hold on to that position for a time rather than trying to see if you can be able to get quick scalps on this one. This market doesn't move that fast to be able to make that type of. Looking at the chart, clearly see why that it only doesn't move at a pace of maybe 49 to 50 pips a day. So kind of position to where that doesn't make it. Last pair that we're going to look at for is U.S. based pairs is U.S. yen. Take a look at U.S. yen. We have a strong push to the upside. Remember, we're trying to sell this pair. Daily is in the buy zone, and we have a counter trend line break towards the overall upside. This is something that, because of this wedge, it kind of makes it kind of hard to be able to trade it. Obviously, we talked about the U.S. dollar index, and I expected the market that we've seen a morning star for with that overall movement, and we start to see that we're getting most of that push against the Japanese yen. And that's the reason why you end up looking at gold and seeing how it end up falling a little bit as well. Want to see how this? We're going to see what's going to end up happening with the overall market. I'm going to stay away for right now. That push that just happened earlier today is too strong for me to be able to say that I want to be able to get in. Total range has been 79 pips. Typically, the range of how the market has been moving is right around 70 pips. So I think the only thing that we're going to end up seeing is retracement. Unless we end up getting a stronger push, kind of like what ended up happening right here, which the market ended up moving 245 pips in a day. Now it has that velocity and it can move that strong. I just don't believe that it's strong today. And that's going to keep that over, staying away from it. Let's get into the indices real quick, and we'll make this very short and sweet. Had a trading opportunity, and I'm very upset about it. I ended up getting into this market when this market was at 30,077. Literally 30,077. That was on Tuesday when the market ended up making its first initial big drop. We talked about how the market ended up having that strong little impulse move. And from that strong impulse move, I literally got into the market right there, 30.77. What ended up happening was that I literally placed my stop loss at a point to where I felt like it wasn't going to end up getting hit at 30,100, and fell asleep. Literally, the market ended up pushing up to 30,000. I mean, it went down to 30,088 right here on this candlestick. And then after that, subsequently, end up pushing back up and moving, then moving from there. And probably one of the more frustrating things, because right now, my expectation still is that the market is going to end up moving up to 32,000, 520 at this particular point. Currently, right now, literally, I'll probably be up maybe about $2,000. Just off of that movement. Now it's just off of one small micro lot of overall entry. I guess that's one of those lessons to where you always need to keep your stop loss below the swing low, which my stop loss was at 29. I think it was at 29,860 at first. And because the market ended up making that movement, I thought we were going to end up having a little bit more stronger of a movement before it actually ended up pushing up, and that wasn't the case. Before the market actually ended up breaking out. Can't cry over spilled milk. What's happening today? Market is in the no trade zone, but we can start to see a crossover to the downside. Does that mean that the market is going to initially fall? I think that the market is going to end up falling because of what ended up happening yesterday. The question is, how strong is the fall going to end up being? And is it worth being able to trade to the downside at a particular point? See that there's more bullish momentum. We can see that the market is in a no trade zone for its overall area. The only way that you could be able to fully get an idea about how this market is going to end up moving is kind of looking at the 15-minute and seeing if you can be able to get a high price to be able to sell. Get a high price to be able to sell, then you can be able to go from there. But I'm looking at the 15-minute. I can see that as in the buy zone right here, and we can see that in 2 hours in the sell zone right there. So it's not aligned. You get in right now, you're not going to end up making any money. You have a better chance of you finding something else that will get you a better movement towards being able to get it. Now it's 100. Now it's 100. We can see that we have a consolidated area right here after having that strong push to the downside, somewhat of the same. We had the strong push to the downside when it happened, pushed back up, and then after that even made a new lower low. So we're kind of seeing more of a triangle that's being created at this particular point off of the 2 hour, which means that we're seeing consolidation off of the daily, and the market should be falling for the overall movement to the downside. And you look at it, we have no clear movement when it comes down to stochastic, which means we have no momentum. If you have no momentum, then you have no movement. If you have no movement, you have no trade. Very simple when it comes down to that. Staying away from last 100. Last one, XPX 500, which would be our last pair for today. XPX 500, if we look at it, it's kind of moving the same way and the same rate of what ended up happening with US 30. It's expected to go up to 38.88. Currently, the market's at 36.60, 37.66. Market ended up having a strong push from that impulse move that ended up happening yesterday. Ended up happening on Monday. Subsequently, has not looked back. It went up to 37.66. With it having no momentum, I'm going to stay away from this market. Well, I'm not going to end up kind of put my money into a position to where it can be able to push from that overall spot. It just doesn't make any sense right now, at least right now at this particular point. But we end up finding the opportunity. All right. Now, if you like what we end up doing, please make sure that you end up liking the Carter Cow Capital business page. Please make sure that you end up subscribing to Trade with Travis. Also, please make sure that you end up tapping into our 5-day Forex boot camp. This is going to end up happening once again, January 25th to January 29th. It's going to end up happening from 9 p.m. to 10 p.m. Eastern Standard Time. And basically what we end up doing is working an hour a day of being able to help everyone be able to learn to go to Forex trade. Literally, it's $25 a session. Well, actually, it's $20 a session. And from there, you're going to end up getting a lot of different things. So whether it fills my book, Success in Forex, you're going to end up getting what I end up doing from an everyday basis when it comes down to trading and learning how to be able to do that. You end up getting quick and easy indicators, and also you'll end up having a mindset and an overall way of being able to trade with other people. Something that I talk about a lot. We really want the reason why we talk about that. We want to be able to bring value and allow you to be able to learn how to create a return on investment. That's the overall point of being able to invest in the first place. You being able to learn that will end up helping you out. Now, later on today, we're going to end up doing a couple things. One, we're going to end up having a pop-up session. So if you're interested in being able to learn, interested in being able to hop in on the basics when it comes down to that, that will end up being a basic session talking about how to be able to trade. Tomorrow, we're going to end up doing a advanced session that's going to end up happening a little bit later on today. All of these will be in my all of these are being on Trade with Travis, and also they will end up being inside of the overall Carter Cow Academy, in which we're bringing that back so people a little bit more when it comes down to Forex trading. My goal is to be able to get people where if you have been with us for a while, you end up learning that strategy, which is going to end up being hedging on pairs like US 30, NAS 100, and everything else like that. Indices hedging is probably one of the best ways to be able to create a stable income with also not necessarily trying to be able to understand the full direction. And we're talking about that a lot. And this is a simple yet repeatable strategy that you can be able to do, and it can create a lot of income while you're actually trading. So please tap in with us when it comes down. Now, like always, thank you for being able to take time to be able to listen to us. If you're watching this after recording, obviously you can send me a message and be able to go from there. Remember, go to cartercowcapital.com/start here to be able to hop inside of one of our webinars and get it from there. But like always, plan your trade your plan. I see each and every one of y'all